It's when you go into an investment, and I've talked about this before, you're going to go invest into real estate or into crypto or into whatever it is that you know, like, and understand. And you're looking to make a return of your investment. You're looking to put your money to work for you, which is what we ultimately want to do. We want our money making us money. But what we're telling you is slow down a little bit, have money flow through something that gives you guaranteed growth, probably going to give you a dividend, offers you protection, offers you control, and then go make the spread in the middle. Because now you have an and both. You're having the money growing somewhere it's guaranteed, and you're going out and chasing the return of something that you feel pretty confident is going to perform for you. Welcome to another episode of WealthWise Banking. Hey, Jeremy Lee Huggins. It is the New Year's 2026. We did it, brother. We're here. And most people, their most New Year money goals fail not because of discipline, but because money is stored in the wrong place. So, Jeremy, before we jump into this, how you doing, brother? Welcome back to another year.
I'm doing well, man. I'm doing really well. The reason we kind of got into this episode is we know people are doing New Year's resolutions, right? They have a resolution around money, a resolution around health, a resolution around finances, maybe it's family. And so we wanted to talk a little bit about that today and how your resolution can go through all of 2026 and beyond. It doesn't have to end by Valentine's Day.
Which most of them do. And Jeremy, it's funny you said that. I didn't know you were going to say that. I was just thinking, I think resolutions are stupid.
Yeah, I think it's
you laugh because I think you think the same thing. I think they're stupid. Like if you think you're fat and you want to get in shape, well, why do you have to wait until another week? Like start today.
don't put off tomorrow what can be accomplished today. That's what I think.
What's a better time than now, right? So,
Yeah, yeah, there's a lot better sayings out there that kind of reinforce all of that. But people do have resolutions, and people do. It's starting anew. You know, I used to date this girl from Russia, and New Year's was like always the big thing for her, and it's because it's a new year, right? It's a new chapter, and I think that's why resolutions may resonate with other people more so than you and me. And that's why we really want to talk about it. It's like, all right, well, how can you bring all of this together? Let's say you do have a resolution. What we want to do is start the new year off right. And we want to
mm,
make sure that you can stick to that resolution beyond Valentine's, beyond St. Patrick's, beyond Independence Day. So that way, this time next year, 2027, you're a completely different person because of the resolution you did set today.
mm. And what I would offer you is that takes different thinking, Jeremy. That takes you understanding that what if, what if the place that I'm storing my money isn't the most optimal place to store money? And that's what we're here to talk about today. We're going to talk to you about how the wealthy create the stable store of value inside their family bank or their privatized bank and why they do it. And Jeremy, maybe jump into a little bit of what we're going to be talking about today and why this really is a difference between where you're at today and where you want to be in the future.
Yeah, I mean, I can sum it up real quickly. You know, money is earned, but wealth is engineered. And I think that we lose sight of that. Money is earned and wealth is engineered. And a lot of folks will end up having these resolutions. And why do they fail? Especially the ones around money, right? They focus on earning more, but they should be focusing on control and keeping that control. This can be the year that you actually get it right, folks, right? But you have to be intentional.
It's all intentionality. It's all about control and guarantees. And all we're doing is we're looking like when we both learned about this, the two things I hear the most in all of my calls are A, this is too good to be true, and B, I wish I knew about this 20 years ago. Now, is that the, both sides of the same coin, Jeremy, do you think? Like they're kind of the same thing, isn't it? I think it's too good to be true, but I wish I knew about this 20 years ago once they start doing it. So, how do they work together? Why are we talking about a different place to warehouse our wealth? Why whole life is a vault? It's not a investment. Like,
Yeah.
talk about that for a second. Why people get confused when they think that this is about an ROI or an investment.
Well, that's it, right? Investments are sexy. This is not sexy. What we talk about is tried and true, and it's been around for generations. It predates the IRS.
Mm.
We don't need to get into all the features and benefits. We have other episodes where we did all of that. But at the end of the day, what we're
But
talking
we're
about are
sexy, Jeremy.
guarantees.
We're
Yeah,
sexy. Yeah, it's hard work, right?
yeah. It's well, Both things are hard work. It's hard work being sexy and it's hard work and discipline. And it's hard work on being intentional about your resolutions and making sure that they last the entire year.
And it's hard work taking something that is old as what we talk about, as boring as what we talk about, as just consistent as what we talk about, and trying to make it sexy.
Yeah. Well, here's one, right? We talked about why this isn't really working for a lot of people is because they're chasing returns and not chasing structure. They're not building systems. And if you look at what is infinite banking in and of itself, it's really a system.
Mm.
All right. And you can chase returns all you want. I like to chase returns. I'm an investor. I do it, but I do that through investments. I don't do that through my wealth warehouse, right? My family bank, my vault, whatever term that you want to use. And you can get frustrated all you want by chasing returns. You can get worn down by chasing returns and trying to capture them. But you alone, right? The guarantees that we help create with your dollar, that's what's protecting you in more ways than one. And building that stabilization, that platform to be able to go out and actually invest from a place of strength. That's what we want to empower. We want to talk to you about the systems that actually empower you and that wealth generation.
Yeah, it's well said. And some of you may have heard this before. If you've been around and been listening to us, it's what was taught to me. It is the both and system, or the and both system, right? Like, however, it's when you go into an investment, and I've talked about this before, you're going to go invest into real estate or into crypto or into whatever it is that like, and understand. And you're looking to make a return of your investment. You're looking to put your money to work for you, which is what we ultimately want to do. We want our money making us money. But what we're telling you is slow down a little bit, have money flow through something that gives you guaranteed growth, probably going to give you a dividend, offers you protection, offers you control, and then go make the spread in the middle. Because
Mm-hmm.
now you have an and both. You're having the money growing somewhere it's guaranteed, and you're going out and chasing the return of something that you feel pretty confident is going to perform for you.
Well, yeah, you want a stable platform, right? A strong base to make the rest of your decisions off of. Like a house is only as good as its foundation. Think of it like that. Your investing strategy is only as strong as your financial foundation. And so when we start talking about banking and we start talking about the way that we use properly engineered whole life, they say safe storage, right? Safe storage. That means I got to slow down and that's boring.
Mm.
But again, storage, it's not about returns at the end of the day. It's about control. Storage is about opportunity. Stability is what's going to give you confidence to deploy aggressively. Think about that. Stability gives confidence to deploy your capital aggressively, especially when the market shifts. So if you're thinking that the stock market might shift and you want to take advantage of those opportunities, buying when everyone's selling, where are you warehousing your wealth today? Where's that capital stored?
And slow,
Chaos.
slow.
Yeah.
Let's stay here for a second, though. Slow. What you just said is something that resonates deeply with me. Being a fan of just high level performers, no matter what it is, athletics, speaking, leadership. High level performers aren't what? They're not rushing. They're not trying to go harder and go faster and do all the things. They're actually such masters that they've slowed down so much that the game comes to them, right? It's the ultimate, like, if you want to run faster, get your breathing right, relax into it, and your body will move faster, because you have to have that certainty, that control, that ability to go and to really perform at the next level. And that comes from confidence, certainty, and understanding what game you're actually playing.
It's all about the foundation. It's all about the foundational skills, the things that the pros get really, really good at, right? What are the basic mechanics?
And we talk to Connor about this all the time, where he's practicing bow staff or sword or whatever it is for his demo team, whatever he's practicing. It's like, look, do that boring thing over and over and over again till it's so easy you can do it with your eyes closed.
Yeah, what's that Bruce Lee quote about kicks?
Oh, uh I don't fear the man who's done 10,000 kicks one time. I fear the man who's done one kick 10,000 times. I believe it's something like that.
Yeah, yeah, that's it. It's about getting good at the basics.
Getting good at the basics again, making boring sexy, which is what we do all the time. We make boring sexy. And so, we talked about January is the time when people promise themselves, this year I'm finally going to get my money right. But I want you to fast forward to the beginning of 2027. If you keep doing the same thing that you've been doing up until this point, and you don't make any changes, you don't change how you're creating your structure, and you end up in the same place a year from now at the beginning of 2027, how are you going to feel about that?
Yeah. What I want to talk about today is more about certainty, right? I think that that should be the focus, whether it is your health, whether it's your finances, whether it's your family. We want to start talking about certainty and creating those guarantees. I know I'm intentional about what I'm going to be doing the rest of this year.
Yeah, and explain how you personally use this. Not the theory of it, but
Yeah.
how do you personally use this?
So if we're talking about the vault, like where do I warehouse my money, right? So let's just say I go out and I create money, whether it's in flying airplanes, whether it's through investment
Wait, you fly
real estate, whatever.
airplanes? I'm just
Yeah.
kidding. Keep going.
But it doesn't matter where you create money. It's how you keep and how you multiply, right? We all focus on the create, keep, and multiply. I'm not going to tell you how to go out and create money. What I will tell you is how I personally warehouse my capital. So that way I can take advantage of these shifts in markets. And the way I do it is very boring. It's plain Jane, vanilla, whole life insurance. We just engineer it for living benefits, right? I do have modest growth that goes inside of it. It's guaranteed growth. It's about 4% before dividends. Think of it as a high yield savings account, but safer and stronger. Again, the money goes in, it gets three jobs. It gets the job of growing at a guaranteed rate inside of the policy, and I get dividends. It has a protection side of the house, another tax-free benefit. Again, this predates the IRS tax code. The third job that it has is when I deploy it for opportunity, right? And I can
Hmm.
deploy it into real estate. I can deploy it into business. I can deploy it into a personal residence. I use it to actually fund my book, The Wealth Loophole, right? I used my policy for all of these different opportunities. So that $1 has three jobs. By where does it go first? That should be the first question is once I get money from the creation side, where does it go first? So we talked about this in a previous episode of the 7 laws of wealth. Pay yourself first. When I pay myself first, where do I pay myself?
You're going to answer that question in a moment, but stop being last in line for your money is what Jeremy's message is. Most people, not you guys, but most people, they're last in line for their money. It is we're paying the mortgage guy, the car guy, the insurance guy, the electricity guy, the water guy, the food guy, the school guy, and then yourself.
Yeah. So I pay myself first. I know Jason, Patty, many of our members, folks that are listening here, you do pay yourself through properly engineered whole life insurance. Why? Well, features and benefits. We get tax advantages by doing this. It predates the IRS tax code. All the policy loans that I talk about for the opportunities, whether it's business, whether it's for investment real estate, I can access that tax free. This isn't an investment. The structure, the whole life insurance, let's get that very clear. It's not an investment. What it is a liquidity system. That's what it is.
An opportunity fund is something you say all the time that resonates with me, right? We recapture interest that was going somewhere else. If we are paying interest somewhere else, we recapture the money, right? We restore the cash value. We build the opportunity fund, and then we do what Jeremy just talked about. Maybe you're, funding your business, you're writing a book, you're buying your personal residence, you're investing in commercial real estate and other real estate. You're building these amazing projects in downtown Savannah. You're doing the things like Jeremy's doing. And we're not telling you what to know, like, and understand. We're just saying you're going to need a liquidity system. And what better place to have it than someplace that you control that gives you guarantees that you're number one in line. And guess what? You're not waiting and jumping through hoops to try to get a loan for something that you want to do because you were
Yeah.
prepared.
Yeah. And what's great about it is when I'm using it for all these different opportunities we're talking about, it's still compounding inside of the system, right? When my capital is in motion, it's still compounding inside of the system. Well, how's it do that? Well, we just access portions of the death benefit while we're alive. Again, it's life insurance. This should be used while you're alive. Everything else, like Jake from State Farm, what's he create for you? Well, he creates what's called death insurance, be quite honest.
I have to. We actually, for everybody, Jeremy didn't know about this. We have to apologize to Jake from State Farm. I actually saw State Farm policy, that was built with cash value, that was actually pretty well designed, that actually they could take a loan against. And, I couldn't really do anything and say anything negative about. So I know this wasn't part of this plan, but, Jake, you usually don't do what we do, but I guess once in a while, you can get it right. So maybe it's like a squirrel finding a nut once in a while, Jeremy. I don't know, but I did feel it appropriate and just being honest about everything that we see. Like I did see one that was actually engineered okay, and I had to tell the person, hey, you should keep banking with this. And if you want to expand at some point, then let's talk about expanding your warehouses of wealth. So
Mm. And that's another great thing, right? You can expand these systems over time. I have four personal banking systems. I know Jason, you and Patty have how many?
we have four, but we have the fifth one underwriting and hoping to get that positive result here and get it funded any day for Diego. So
Awesome. Yeah, that's good. Uh, and the system that you have multiple policies. Why, right? We talked about a little bit earlier. It's a both and, it's a growth and protection side of the house. So
yeah.
how are you using it?
No, it's thank you for the question. I mean, we like I mentioned, we recaptured interest that we were paying to everybody else, Family Ford, Hyundai, water filtration system, debt consolidation. Because guess what? I'm not some kind of financial genius. Like I made all the mistakes that most people make, and I finally said, wait a minute, this doesn't seem to work. Everything that the financial advisors were telling me, work longer, take more risk on. I was like, I don't like any of that. I don't want to work more and I don't want to take on any risk. And then we recaptured the money, Jeremy. We found something that we felt comfortable with, that we vetted, that we really put our money to work. And so we have passive income coming in, but that income is helping us take care of Patty's father. It's helping us go on ski vacations, right? The money that we're creating, and we're going to keep expanding our system because we have a plan, a 10-year plan that will have hit our number, right? Like our winning number, I call it, where now we have total control. We have everything covered from the business side, from the personal side, and now everything is just gravy. Like we can choose to work, which we will keep doing this because we're not that far away from that number, but it's the thinking long term is what I'm sharing. Like our combined five policies to 31% annually that we're putting into those policies. And now we have that manageable floor that might seem high for some and low for others, but we know our manageable floor is around 46,000 a year and we know what that ceiling is. And then we're thinking long term. And I'm going a little long here because I want people to hear that it's not just once you start the system, once you start using this as your foundational tool and you understand how to follow the laws of wealth, you will want to expand on your system. And then we have to look at why are you expanding it? What is the goal? How are you treating money? How have your habits changed? How has your thinking changed? And all the other things. So,
Yeah. Yeah. I mean, we got to keep hitting this home. This is a liquidity system. It is a bridge between saving and investing. This is where you store your money before you deploy it. This is
yes.
where you store your money before you deploy it. And what's cool about it is that when you deploy it and you're going out and getting all these investments, whether again, put it in the stock market, put it in real estate, put it in cryptocurrency. I don't care where you put it. Just create the stability, the stable foundation first.
Yeah. Always first. You're always going to build your house not on sand, right? You're going to build on what? Bedrock.
Yeah.
And
And
then
what's
you go
nice
deploy. That's what Jeremy's saying. Then you go deploy.
And what's nice is you can go out and deploy and build and create, and it gives you what? Permission to spend it all down to zero. Why? Because you actually purchased your net worth. You purchased it through the death benefit. That death benefit will pass back to your beneficiary. Let it be your trust, let it be your children, and it'll go to them tax free. So you don't have to choose later in life to set something aside from your investments. The strategy that we're talking about gives you the liquidity pool today to go out and deploy for opportunity. Those opportunities, enjoy 100% of them. This is your permission slip to spend to zero and still pass on something meaningful beyond you.
Yeah. Way beyond you, too. Like, put it this way, if you know by starting this, by the time that you graduate, by the time you die, you're going to leave your next generation as millionaires. You are the wealth creator for the family. Then you got to pass on the systems and processes, which Jeremy and I will be talking a lot about this year, right? But first, we gotta look, and for you, you want to reflect like, are your assets cooperating, right, or are they competing for attention?
That's such a powerful question. Are your assets cooperating, or are they competing for attention? What does that resonate when you ask that out loud? Like, what's the first thing that comes to mind for you, Jason?
That there's only one pool of money, Jeremy,
Hmm.
and is your money aligned? Like, is your money doing the job that you gave it to do, or is because you're going out and you're too busy, is the different things your money doing competing for your attention and drawing away from your actual purpose?
Yeah. So part of your resolution this year should really be about intention. What is the lifestyle that you want? If you're thinking about, oh, I want to lose 10 pounds, it's not the fact that you want to lose 10 pounds, it's what's the habits that are going to get you to lose 10 pounds. If you want to be fixing your financial picture, it's not, I want to get out of debt. It should be, what are the systems I'm creating to get out of debt? We need to focus on the how, not the what.
100%. The how, and the how comes from being resourceful, from asking better questions. And Jeremy, like why? Like talked to someone earlier today and earlier this week, and they were talking about high commissions, and they were talking about risk, and they were talking, and they just hate it. They're completely
Mhm.
opposed to this strategy. What we talk about, what we believe in, what we actually personally do, they hate it. Why?
Well, a lot of it has to do with poor structure. I'd start there. Most people do not know how to engineer for wealth, right? They don't. At the end of the day, we're taking a life insurance product and we're creating a family bank with it. We're creating a vault, a warehouse of wealth, if you will. That is very nuanced. It's not easy to build these out. You have to be very intentional, which is why we have to have a one-on-one call with every one of our members because they're all personalized. And if you don't get the structure right, the whole system will collapse. So go back to building sand and not bedrock, right? We're also not setting the right expectations.
Yeah.
Again, too many people try to turn this into what it's not. That's where you get into the IULs. This is not an investment. Let's be very clear. Does it bridge the gap between saving and investing? Absolutely. But it's not an investment. And when you set the wrong expectations along with the poor structure, of course you're going to hate it. I would hate that. You would hate that. So you can't treat this like an investment. Instead, treat it as infrastructure. That's what you need to think about. In episode 46, we actually covered how a family lost $8.5 million
How
through
much?
8.5 million through
Oh,
poor structure
wow.
and poor expectations. Why? Because they use an IUL. And you can tune into episode 46, go over to that one. We'll talk about that and get in more to it. But really, I would hate it too if I was given the poor structure, wrong expectations, and treating this like a system that it wasn't, right? When instead, what we're doing is we're guiding, we're sequencing, and we have to have that individualized conversation in order to actually map this to what? Your resolutions.
Your resolutions and anybody who's out there and you're shopping, right? I had someone tell me this the other day, Jeremy, you know what I told her? She goes, "Yeah, my friends told me I should go and I should shop around." I'm like, "Well, that's really good advice typically, but here's the thing. I don't do that." I go, "You came to me with a certain problem. You told me how much that you were following the first law of wealth, what you wanted to do. We applied for that. It is solving your problem of buying this new vehicle that you don't have currently. And all of a sudden you're telling me you're going to shop around. Like, what are you looking for?
Mm-hmm.
Right? What are you looking for? Like, what is the thing you want?" And she started talking about, well, what's the return inside of this? What's this? I'm like, look, I love you. If you choose not to work with me, that's cool. But if you're talking about that, you're probably on the path to losing a lot of money and losing control. And because now someone is telling you it's about the shiny illustration, what it looks like, when it's actually the process of what you do with it. Because remember, any illustration, no matter how well designed, is nothing more than a snapshot in time with assumptions. And usually, if it's with a whole life, mutually owned dividend paying company, it's going to even perform better than it shows on that piece of paper for most carriers, right? The ones that we trust and we know and we use. But at the end of the day, if you don't work it, does it work, Jeremy?
No, it won't work. Yeah. So she's out there chasing returns at the end of the day. That's what she's doing. But uh, my response would be, have you created the stable foundation? Are we setting the right expectations, right? Do you have the right structure? I know that you build the right structure because I've seen your structures. They're incredible what you build. And I want to reiterate this to people. We said this at the beginning of the podcast, but money's created and wealth is engineered. If we're going to engineer something that's intentional, we did it because we listened to you. All right. This is not
Yes.
a one size fits all.
No, it's different for every single person. And the more the more that you're clear on what you want, the better the engineering will be because we can create what's going to fit by going to different carriers, by doing different designs, by really knowing what you want to do, not just at first, but what you're trying to do 10 years from now. Because again, Jeremy, builders don't rush, they don't guess.
Mhm.
They give their money a home that supports everything else that they're building.
Yeah. So, and this year in 2026, if you're looking for clarity instead of guesswork, start with where your wealth lives. Where do you pay yourself first, right? And we can get very clear about that. Just book the strategy call with myself, Jason. We're not going to tell you what to do with your money, but we will help you engineer wealth.
I love that. We will help you engineer wealth. Book that call. Go to wealthwisebanking.com. It doesn't cost you anything other than your time, your energy, and your courage to show up and get into what you really want with us because don't go another year. Don't show up in 2027 exactly where you're at. Make a decision. Take some action. Be like Nike because we already know that you're already in banking.
You're just not the banker yet.
Be blessed. See you guys next time. Thank you.
See you next week.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.